Welcome to the Altcoin Hour, your weekly alpha. Yeah, we breaking down the charts, flipping bags, playing smart, from the dips to the moonshots, connecting all the dots. Let's get it. Altcoin Hour.
All right. Welcome to the show. I hope everybody's doing very well. Welcome to the show. We got a lot. What's going on, Benji? What's going on, brother? I hope you're doing well. We got a lot to get into today. Hopefully that wasn't too loud. I think I hit the door. I think I hit the desk too hard. So hand clap to you guys. We're going to be talking about Bitcoin. We're going to be talking about a lot. We're going to be talking about CFTC. They may be biting off too much of the pie when it comes to regulation. We're going to talk about Clarity Act too as well, because I have to tell you, let me back up off this a little bit. I have to tell you, there's some issues with this, the way they split this up. There's a lot of issues with the Clarity Act, guys. And when it comes to prediction markets, they're evolving. We're going to get into the chokehold there because the CFTC, they're asking for more money, not even more money, but they need a whole new staff, well over 600 people to actually regulate not only prediction markets, but the space in general. And let me mute. I got to mute my cell phone because I don't want any interruptions here. We don't want a phone call during the actual show. I'm going to bring in LMFG too. Welcome to the show. Hand clap to you, brother. Hope you're doing absolutely fantastic, man. There you go.
Yeah, man.
What is going on? So, yeah, man, let's go ahead and we're going to get into it. I hope you're doing well. We're going to be talking about that new stablecoin too that just was basically erected, and that may be the wrong term there. Implanted. It's online. A lot of people aren't talking about it. The Georgia stablecoin. So, and I told you guys, all states are going to have their own working, viable stablecoin within the next 5 years. Georgia is going to go ahead and do it now. Right. So Texas is going to be doing it as well. But I think Georgia is going to spearhead this movement. And LMFG, what do you think about this, man? We're going to get into Bitcoin too, because there's some macro things we're going to talk about with Bitcoin, why it's consolidating so stalely. We're going to get into XRP today too as well. There's a liquidity squeeze there going on right there. CFTC, we're going to get into that Clarity Act, stuff right there. But when it comes, and we're going to get into some major DeFi issues too. When it comes to competition, when it comes to the banks versus DeFi, and if DeFi can really run with the banks, we'll get into this because I found some very interesting things when it comes to what the leading DeFi platform lacks when it comes to keeping up and basically running in parallel with banking systems in the real world. But this these stablecoins, LMFG, as we pivot out, I'm gonna go ahead and pivot out into the actual chart. I'm gonna bring you into as well. I want to get your take on this because we're talking about these particular, movements when it comes to stablecoin activity, when it comes to stablecoins being used statewide, individual states. Wisconsin is doing this as well, but Georgia is like, let's go ahead and start this now. What's your take on this?
Yeah, I mean, this is just like Wyoming's got theirs running already, right? Mm-hmm. The front Bitcoin. So, and like you said, yeah, I see this all states doing this. Now, what are they going to do with it though? If that's how they're going to pay all the bills, this could be a beautiful thing as you got transparency. And at the same time, anybody that's into fraud is not going to like this.
They're not going to like it. Yeah.
No.
I thought it was interesting because I think it's a great way, like you said, fraud. But a lot of people are saying these are CBDCs disguised as stable coins. And this is exactly what I've been saying for the last 2 years. Even though there's anti-CBDC language, within the bills, they're still going to have stable coins. They're going to walk like, and they're going to talk, and they're going to smell like CBDCs, guys. And they're programmable as well. They can shut them on and off. They move just like CBDC. So we can call them stable coins all you want, but when you're talking about putting one and instituting it, and we'll get into it in a little bit. And by the way, Tether is actually sponsoring this particular situation. They've helped build this. It's not who I thought it was going to be. It's not Circle. It's Tether that's actually built this stablecoin for Georgia. That's another interesting thing. I think Tether's kind of cornering that market of state-sponsored, state-run stablecoin activity. It's Tether, not USDC, not Circle. Very interesting there. But I digress from that. We'll get into that here later in the show.
And isn't Tether building another network to be legal?
Absolutely.
all legal in the United States. So I'm assuming that's the network it would go on.
Yeah, absolutely. Yeah. Tether's getting their things together. They're getting their ducks in a line. And I thought Tether was going to be regulated out, but not so much. And again, like you just said, they kind of splintered off and built a US friendly version of their stablecoin. So, it's not, I thought USDC, I thought RLUSD, that's that Ripple stablecoin. I thought it was going to kind of, usurp this position, but I think Tether's going to hold on to number 3 because of what's going on here. And in Wyoming as well. I think Tether's over that too as well. They built that situation too. So stablecoin activity is crazy right now. Crazy. I need to pull up DeFi Llama too, because I want to show you guys that it's crazy. But let's go ahead and look at BTC, and we'll pull BTC up, and then we'll get into the rest of the altcoins. Then we'll get into this Tether story in Georgia, state-run, state-sponsored stablecoin that's online. We'll get into XRP's liquidity crunch as well. The AVA, which is the largest DeFi platform, and I want to use them as a tether. When we talk about this, DeFi versus not CeFi, but real world banking infrastructure, real world banking activity, real world banking volume. Is DeFi going to be able to keep up? Is it going to be able to even, run parallel infrastructurally? And when it comes to liquidity, when it comes to collateralization, servicing real world users, right? Because we know it handles, millions of dollars enter space, I'm talking inside of the space. But externally, they're going to need to have that bifurcated value. And can they keep up? The actual data that I've seen so far, we'll talk about it. CFTC needs help. We'll get to that as well. But LMFG, $74,000 when it comes to BTC. Let's talk about what's going on, because you can look at the chart. We'll zoom out a little bit. You can clearly see consolidation, but you can see a downward trend. We hit on May the 14th, $84,000. Ever since then, you can argue it's geopolitics. You can argue the outflow when it comes to ETFs, that rotation into the tokenized sector, the RWA sector, the altcoin rotation. You can clearly see it. And it's crazy because that's coming out of the ETF basket, LMFG, that rotation into alts. That's coming from ETFs. We know that the retail is out the door. Retail spot is thin right now. That is a very thin margin. So when when institutions move, when the ETF vehicle flows back into the altcoins, I'm not saying that's going to, spur altcoin season, but that's significant. And then you have the actual fear-based trading as well. What's your take as we get into what's going on here metric wise with Bitcoin? Currently at 74, pushing 73, I think very, very strongly. You can look at this trajectory here. That is a sharp dip down, LMFG. This is coming from ETFs too, and it's all rotating into alts, particularly the tokenized sector.
Right, yeah, and I see that a lot of exodus out of a lot of the Bitcoin and Ethereum ETFs, and I've seen a lot of turmoil going on at the Ethereum Foundation.
Oh boy,
Eight guys are out.
Yeah, core leaders, man, researchers, yeah.
And then BlackRock and everybody dumping the hell out of the ETFs, the Ethereum ETFs.
Yeah.
What's going on?
It's not good, brother. It's not good. And that ETH thing is ugly. ETH has a privacy issue. Institutions, people who are looking in, they want privacy. They want privacy protocols. They want privacy networks. ETH is behind the fold when it comes to that. So there's a major rush, major push, major exodus. I guess the thinning, the trimming of the fat. That's what I like to call it. This is what Vitalik is talking about. This is what's going on. It's really scaring the hell out of the holders. But there's there's an internal purge that's going on with ETH right now. We're talking core developers, core researchers, important people that are either saying, 86ing, basically saying we're out of here, or they're just basically getting fired, getting pushed out. It's interesting. We'll get into that. We may get into that if we have time. I want to keep it short today, around 40 minutes. But what is going on here, LMFG? This is what we're looking at now. Bitcoin is basically stuck in a consolidation mode, essentially, with a lot of downward trajectory. Okay. 74, 77 range. A lot of volatility, especially within 2026, as you can already see. Spike to $84,000. And what we see now And a lot of people are like, this is geopolitics, man. There's nothing wrong here. It's just US and Iran, these ceasefires that don't really result in ceasefires, these deals that don't result in any like ending of confrontations, or whether it's verbal or whether it's like kinetic. Things seem to be very volatile, right, in the Middle East. Now, you have the derivative factor too as well. Okay, and LMFG leverage is crazy. You can see what's going on with XRP as well. That leverage is crazy with XRP. Not only with XRP, but a lot of the alts, a lot of Bitcoin, right, all the way down to blockchain coins. Derivative markets are crazy pressure right now. Stocks are hitting new highs while Bitcoin is lagging. So there's a divergence there too, because Bitcoin is running with tech. It is not running with tech anymore. It's kind of moving to its own beat with a lot of pressure on board. Now, here's the number one thing. We're talking about macro headwinds, LMFG, the sticky or higher inflation situation, CPI, PPI, those numbers are crazy. This is pushing back hopes for rate cuts. We're not getting rate cuts in LMFG. We talked about this. When I was saying we're going to get hikes, people are really, really like, Michael, you're crazy. They're not going to raise these rates. I think they're going to raise the rates. And I'll keep saying this because of what's going on here, because of what's going on with the economy when it comes to all these defaults. Not only retail, but commercial defaults, right? When it comes to what's going on in the Middle East, LMFG, when it comes to the situation where you have logistic shifts with AWS, with Amazon completely taking over, unleashing their supply chain, all right, to the entire, not only the country, but the world. That is upsetting the balance when it comes to FedEx and UPS. All these things matter when it comes to not only stocks, but crypto as well, because Bitcoin is tethered. Crypto is tethered to the stock market right now. And that tether, that connection is tech, right? AI, things of that nature. So this correlates very, very closely, but you do see a divergence here with BTC. Now that untethering effect can be very violent because the margins are thin. The liquidity is thin. It's derivative heavy, right? Institutional heavy, ETF heavy, retail is done, right? Spot is very thin. LMFG, these these metrics are very, very shaky. I see a tanking effect, especially if war breaks out again. What's your take on this very, very thin margin when it comes to spot versus derivative heavy, ETF heavy, institutional inflow heavy flow when it comes to BTC?
Yeah, all of that stuff I'm extremely afraid of. You play in the futures. I mean, you're gambling on top of gambling, if you ask me. You know?
Absolutely.
I stay away from that. A couple of my buddies want me to get into it, and I'm like, no. I said, you want to do it? You go ahead. Oh, I don't know how to do that shit. I'm like, well, go hire somebody else. I handle their computers and their wallets, move their shit around, but I don't want to start playing like that.
You got to be careful. Yeah,
it's too dangerous, especially if I'm doing it with other people's money. And it's bad enough when I got to bridge something, I'm shitting a brick for an hour or two, because I moved 20 grand or something, and it's like, where is it? Crazy.
But look at how it's affecting Bitcoin and a lot of alts too as well. BTC is basically correlating more with the equities, right? It's not getting easy money anymore. The tailwind is crazy right now. So it's trying to pick a lane, essentially. Now, I always say if you remove ETFs, you remove the institutional inflow. And by the way, Michael Saylor, I don't know what's going on with strategies, but I've been reading a lot of weird stuff about strategies. And, they may be pulling a plug. If all hell breaks loose in Iran, they may pull the plug. They're right in the middle. And I think that AK, buffer, I think that was BS the whole time, bro. Because I'm watching strategies. I'm really watching strategies. It's very shaky what's going on there. We've seen that huge sell with BlackRock. There's private credit issues with BlackRock that can be forced to liquidate as well. These ETFs can go backwards real quick, and that's going to crush spot because it's very, very thin, and that's going to crush retail. So that's just the macro side of it. Let's get into this ETFs outflow and institutional pullback, because that's factoring in as well. Spot Bitcoin ETF flips from strong inflows, right? April and May is what we're talking about. May was pretty. The first week of May was crazy, $84,000. But look at where we're at now, right? 2 multiple days of outflows, mid to late May, over $1.2 billion, right? Let's go ahead and you can go up to 1.55 billion within the last week. So the total is around 1.6 billion in outflows when it comes to institutions and ETF outflow, with a record single day redemptions recorded earlier. Institutions appear to be de-risking LMFG. Okay, we've moved from the macro headwinds. We're dealing with the core of this floor. ETFs, institutions, they're pulling back LMFG. Record single day redemptions that were recorded earlier. Okay, risking and profit taking. This is what we have: a risk off, profit taking, full. It's ongoing, right? This is going to remove the key bids that power previous rallies. So that particular power structure, it's evaporating LMFG. ETF fatigue. You think this is what we're actually noticing here and what we're experiencing? ETF fatigue. What do you think?
Yeah, all means. And again, retail.
That's not good, brother.
And no, not at all. And retail is just sitting on the side because it's
absolutely
it's not crazy. If anything they're doing is they're even selling at losses. You know, it's from what I'm seeing. It is what it is, man. Again,
ETF fatigue. Wow.
Yeah. Yeah, and I heard you say Sailor, and I see he started buying bonds.
Yeah, I'm worried about strategies.
What if they say, "All right, we're out of Bitcoin. We're
out of here.
Putting it all into bonds."
Right.
And
okay, so you understand why exactly LMFG. So you understand where I'm going at. That's why I'm kind of watching them and worried about it. Go ahead, brother. I didn't mean, but you tapped in on what I'm worried about when you brought up the bonds.
Yeah, I mean, you don't know. You know what's their direction. And I was being a clown there. Says, yeah, maybe in half a bill put to the yen. Follow Buffett.
Oh, Buffett knew exactly what he was doing.
Yeah,
he's so smart. We talked about that. Let's get into the technicals, because repeated rejections at overhead supply zones. We're talking 78K, between 78 and 82. Repeated rejections. Price is cooling with reduced leverage, guys. Future open interest way down from peaks. And lower volatility as well. It's a classic consolidation after the 2025 snake year. This is a consensus, I'm telling you guys, of sideways choppy action and prior corrections. Don't get me started on geopolitical noise. Mixed Middle East signals cause short-term spikes and reversals with liquidations. There's that derivative aspect of it that Bitcoin didn't have to deal with, 5-6 years ago. It's taken over the market. Don't get me started on prediction markets too as well. That's crazy too. We'll get to that because the CFTC has their hands full. It's completely tied with that. But we'll get to that. Broader caution is in risk markets when it comes to geopolitical noise. Some traders know stocks outperforming BTC recently. Welcome to the show, Fat Man 047. Good afternoon, brother. Stocks are outperforming BTC, and there was a correlation there. It's more correlated. BTC is more correlated to equities now. BTC recently and are watching for potential rotation, and we see the rotation. There's no potential. We see that LMFG. We talked about that altcoin rotation, but right now it's more of a risk-off situation. So let's talk about geopolitical noise. We understand. Apparently there's a deal, and then there's not a deal. Trump announces a deal, and then Iran says he's lying. He's delusional. We don't know what he's talking about. By the way, we just shot down the F-15. It's crazy right now, LMFG. We were just talking about that before we went live. This geopolitical noise is weighing very heavy on not only stocks, equities, commodities, but it's weighing heavy on Bitcoin's price movement, even with this inflow. And you see the ETF fatigue kicking in. That's the new term. That's the new hashtag, ETF fatigue. This is not good because there's a lot of things that are going on geopolitically that just don't add up. Now, when it comes to strategic American oil reserves, that may be a huge acronym going forward. If all hell breaks loose and we have a complete halt in production in the Middle East, some would say this is why Venezuelan oil fields were actually confiscated. Some say voluntarily, some say forcefully. It doesn't really matter. The U.S. has control of that now. So is this part of the actual angle to bring that service to America so we can service the world when it comes to oil, distribution. I don't know. It's crazy. I think it's a failed situation. It's caused a huge shakeup in not only stocks, commodities, equity. By the way, the U.S. has already had economical issues way before the Venezuelan conflict, way before the Middle East conflict. We were already headed downhill. Okay. This is the big elephant in the room for me, LMFG, when it comes to geopolitics, man. This is weighing heavy on the actual movements of not only stocks, but crypto as well. What's your take on the actual noise and the sentiment? Because some traders know stocks outperforming BTC, but some say BTC is trying to catch up. I don't see anything getting better until we get massive 100% de-escalation when it comes to this, what's going on overseas. And I think a lot of the Middle Eastern countries that produce oil that have damaged infrastructure, that's going to take maybe a year to repair. I think they feel the same way. What's your take on this, bro?
Yeah, it's ugly, man. I agree 100%. And if this thing drags out, who knows? I mean, and it's getting ridiculous every other day. Oh, it's good Peace Corps talks. The next day, oh, we're bombing them. It's just ridiculous. They got to fix this. And then the Clarity Act. I mean, I've said it enough. I don't see that happening this year. Maybe late in the year, right before they take their winter recess. Otherwise, it's going to be sometime next year.
Yeah, absolutely.
But, it's just too many things getting thrown at this. And like I said, and now Elizabeth Warren, she's just all over the place. She's
on steroids right now. It's crazy. Yeah,
she's throwing so much shit. I think I remember seeing a thing with Gensler where she's just like there's throwing poop on the wall to see what would stick, and then laughing. And I see that. That's what she's throwing.
They're throwing a lot of poop, bro. I mean, it's just sliding down the wall. It's on the ground. It's too much, bro. It's really too much. And I think the ethic thing. The ethics language. I call it the Trump law. Essentially, they want Trump and his family out of crypto. They just want him out. It's not going to work. Now, there's some issues with the Trump media. Apparently, they're selling Bitcoin. I don't know. I was reading that earlier. But that's besides the point. I get it. There's a conflict there, but it's a done deal. I think going after Trump right now, they're too late. 2 meme coins launched during the inauguration, right? They already made billions of dollars on Worldly Finance. They have implanted infrastructure, DeFi infrastructure. They're going to be doing, tokenization, RWAs on the Worldly Finance platform. It's already built, solidified. And even if they, pass some laws, all he has to do is hand it off into, it's in a trust base. I think it is. He can hand that off to a subsidiary. Or, someone that he can, fund to run it and still reap the benefits. So I think it's too late to regulate Trump out. It's too late. I think this is just stalling out the Crypto Act. It's ridiculous. Trump won that fight when it comes to making money in crypto. He's already made billions. So I think it's too late to come back and say, you can't do that. You're too late. He's already made billions.
Right. And like you said, I guarantee you, he has a plan B and C.
Absolutely.
Paperwork set up and ready to go. He would sign it immediately, and everything goes into a trust or whatever. There's something there where he gets and his family gets away from it. Yeah,
it's a wrap. He's good.
They'll be right back in there in 2029.
Yeah, he's a smart man. He's been doing this, dude. He's been fighting, bucking the system. Ever since he was an early developer, he's been filed bankruptcy 8 times, bankrupt so many casinos. This guy knows how to run around. He knows the loopholes. He knows how to get shit done. Right. Trump is something else, man. But and he's our president, so it is what it is. But for them to come back this late and say you can't do that, you're wasting our time. You're backing up important legislation. You know what I'm saying? Pull back. Let's get this through because we need this. I think if we get the Clarity Act market structure bill passed, Trump signs it, I think it helps the agenda. At least we get clarity, and I think it helps DeFi. Crazy help when it comes to DeFi, and it helps the stablecoin initiative too as well. It helps the Bitcoin strategic reserve move on too as well. The push into the real world. A lot of the altcoins don't need this language. Ripple doesn't need this language. XRP doesn't need this language, right? But there's a large amount of infrastructure that needs the Clarity Act to move forward, right? because they need the clarity. So, it is what it is. We'll talk about the actual split when it comes to the SEC versus CFTC and the actual regulatory value there, because I believe the CFTC, they don't really understand what they're doing. They don't have enough manpower, money. I think this is a big mistake, and I'll tell you why in a little bit. We'll get into that. But as we move on with this particular situation, let's go ahead and close the Bitcoin. This is my thoughts, my quick take, short term when it comes to and long term take on Bitcoin. Expect more choppy and range trading, guys, until clear catalyst hit. We're talking about Clarity Act, better inflation data, big ETF inflow reversal because we have major outflow and a huge macro shift. We need this short term. All right. A sustainable break above 78K would be awesome. It would be absolutely fantastic. That would be bullish. But if we continue to lose, especially with what you see around $74,000 right now, if we go below that, that's going to open the door to deeper tests. And I think that's going to be around 70K LMFG, possibly 65K if we get to 70K, because it's going to induce a lot of fear. You may see some more ETF outflow. You may see some more institutional outflow, right? More rotation into alts. Okay, short term, pretty bearish, right? And if we get escalation in the Middle East, you could possibly see 50K. That would be dreadful. Okay, especially if we get the call and Congress does not forward the Clarity Act to President Trump's desk. You couple all of that, escalation, full out war. Hold on to your bloomers. As we say this out, hold on to your britches, right? You probably hadn't heard that before, because it's going to be a hell of a ride going down, guys, right? So a lot of you just going to hold. I get it. I'm going to be buying some dips and some solidified, infrastructure. That's what I'm going to do. I'm kind of looking forward to it. And a lot of people are like, you're crazy. People are going to lose money. Listen, I follow Buffett. I love it when it's red. I love blood in the water. I'm talking, when it comes to stocks and, crypto. I gotta clarify that. I'm not talking anything gory, but I'm talking about when it comes to red charts. I love it because I like to go in and scoop up the good stuff when it's low and then make money as it goes up. That's how you make money in this space, right? And a lot of you seasoned investors already know what I'm talking about. I think we're going to see a lot of red. I really do. It just doesn't look good. Now, long term, still structurally positive, right? Institutional infrastructure, ETFs, scarcity, right? I think that long term is going to pull us out of this post Clarity Act, right? Post de-escalation. We get some sanity in the White House, get past the midterm situation. We don't know how that's going to turn out, but a lot of people are like, it's not going to be very good for, the Republican Party. We'll see. We can predict this, but, we'll see what happens at the end of the day, right? We'll see. They may retain a power. We don't know, right? Just look what happened with Massey. Crazy. Okay. But as we conclude with the long-term look on a BTC, this breakout is going to need a lot of macro alignment and, less hopium, but we're going to need a real-time movement, guys. This is what you need to watch. ETF daily, weekly inflows. We need green days, guys, when it comes to this. Watch the key level support at $74,000. All right. Resistance breakout above 78 is going to be amazing. That will bring in some money. All right. We know how that goes. That's pretty much traditional, especially when it comes to Bitcoin breaking resistance levels and other alts as well. US inflation and Fed news. Hopefully we don't get rate hikes. Let's just say if they cut the rates, LMFG, that'd be pretty bullish, not just for crypto, but across the board. Right. That'd be pretty bullish. But I don't think we're going to get that, unfortunately. And of course, you need to watch geopolitical headlines, right? We get massive de-escalation. You couple all that with lower interest rates, right? Lower inflation, which is going to be very, very hard. But let's just say it happens and you get a breakout over 77K into the 80K range. Once again, ETF inflows, you're going to see a lot of green at that point in time. LMFG, this is the way I see it short term and long term. We'll close the Bitcoin segment out with your final take.
No, I pretty much agree with you 100% there. There's nothing else that I can see happening. You're not going to, like you said, the institution money is not going to come in until that Clarity Act goes through. We're seeing BlackRock's, all the big boys. They could give two shits if they lose even $1 billion, whatever they have.
Yeah, absolutely. That's peanuts for them.
It's peanuts to them, yeah. But the small guys are not going to touch this until this Clarity Act goes through. And then that's when you'll really get your retail to start coming into this. Yeah. Because even the small brokers and stuff will start selling it, you know? And I think that's when it'll snowball, and not beforehand. And then with this war, like you said, I mean, 70, 65, hell, 60. If this thing becomes all full out and they start blowing up some of those ships, yeah. I mean, those are easy targets for Iran right now. You got to realize that.
Exactly. Yeah.
You know, and you got thousands of guys sitting there. I don't know what they're doing. I guess they got to be running around restocking them with food and water. You know, they only have so much food and water on them ships. They've been sitting there now for a couple of months.
Yeah, they got to get those carriers back. You know, I would argue, you know, the George Bush carrier shouldn't even be out there. It's in really bad shape. You have 2 carriers that were in the middle of repairs, but they were forced to go out there. So, I mean, we're kind of limping into this. I don't think it's a good advantageous thing. We need to get a deal done. We need to get out of there very, very quickly. And that's just my take on that, because it's weighing heavy on the markets, and it's clearly affecting stocks. But excuse me, you do know that there's a lot of, and I know you know this, brother, the long money, the institutional money is going to pump tech. They're going to pump, you know, the stock market, because there's a lot of 401k activity there that they have to preserve, right? They cannot allow those 401ks to go bust. That is affecting people's retirement. Okay, so they have to pump the stock market. This is why I don't look at it's a fake barometer, because it's being fictitiously, you know, pillowed and fictitiously held up because of the 401k activity that has grown over the past decade. There are a lot of retirees that are heavily invested in stocks right now, and their 401ks or retirement funds are heavily implanted. So they have to prop that up. When that goes boom, you know, and I'll digress, but then that affects buyership. And that's when you have people liquidating their stock portfolios and their crypto portfolios just to survive. That's a factor that we are talking about. To me, that's the end of the road when it comes to a lot of these floors. We're going to see all-time lows then, because a lot of those investors are silent investors. You don't see them on X. They don't have YouTube channels. They're not bullhorning crypto, right? They're not maxis. They're just trying to make money. They're just trying to pad the portfolios and set up a nice nest egg. They don't care about the actual, you know, metrics. They're listening to fund managers and things of that nature, right? So I call them silent retail is what I call them. I talked to a lot of them actually recently. But this is what we're talking about. Now, the odds of recession, I was just saying this as well. This dropped an hour. This is going to be an actual poly market situation here. The odds of a recession in the U.S. this year basically is falling to an all-time low. So a lot of people, it's around 20%. So a lot of people are actually, you know, saying that our recessionary pattern is decreasing. I don't too much agree with that, because if you think about mom and pop, you think about ground level activity, real world activity, a lot of people are freaking out on the ground right now. Okay, so I would argue that we've been in a recession for an entire year already. But they're not going to say that. They've been padding the numbers, and I don't think you can pad them anymore. So here's something that just rocked out here. Yeah, Tim, you know what I'm talking about? He says, yes, I've been around. The President Trump, just on the geopolitical front, and we're going to move on, says he is not considering lifting sanctions on Iran. So again, this is one of the talking points. This is one of the points of the agreement, the actual readout of the agreement when it comes to what Iran wants. They want those sanctions released. And Trump just said he's all over the place with this. 1 minute he's going to release them in 30 days. And the next he's saying right now, just dropped an hour ago, we're not lifting sanctions on Iran. So, this may be a year-long situation. This is going to put amazing pressure on not only crypto, but stocks. And you're looking at a future spot. And I don't like looking at these oil futures because they're heavily manipulated. Okay. But we talked about this element, and then we'll move on to the top stories here. Crude oil, WTI, 88 spot price, $88. I'm sorry, futures price, which is fictitious because you have a spot price, right? that's around $130. That's what they're paying for it. So that's what you should actually be worried about. It's still over $100. The futures price is fictitious. It's manipulated. It's not the real price of oil, guys. Spot. Look at the spot, right? Brent is still 92, so that's well over $135. So these oil, the transaction on the ground, it's still well over 100. This is why a lot of the gas, pumps, when you see the price, you're like, okay, Trump is saying this at $89, $92. We should be able to, trade for it. We should see some pressure released here, some risk on activity. No, because real people understand that the spot price is still well over $100. That's why the gas pump still keeps going up, because real, transactions per barrel is not $89. So you got to be careful with the spot market, because it's been heavily manipulated. And once the majority of the people figure this out, they're going to be very pissed when they figure this out and they understand how they've been manipulated to think that oil is going down. It's not. Okay. And you could say the same thing about the crypto when it comes to the heavy derivative trading going on and that pressure when it comes to alts and Ethereum and Bitcoin. It's ridiculous right now. So LMFG, I don't know if you have anything to say about that before we get into this top 25 countdown, but the manipulation is crazy.
Yeah.
It's at an all-time high.
And it's really, the manipulation is, it's making it easier for them the way this thing's going with the headlines. One day on, one day off, one day on, one day off. And I'm telling you, go look at the volume. Sometimes the volume just goes off the wall. It just Trump saying one thing, and believe me, that's being manipulated big time.
Absolutely. You're going to do it so long. And again, they're doing this to keep the stock market up because the 401ks depend on it. They're trying to suppress the prices, but I'm telling you guys, the oil producers, they're not buying it. The diesel price is still above 5. This is an average here in Texas. I see it all the time, right? I think you're still above 4 for regular unleaded in most areas. Don't get me started on the West Coast. California I don't see how you're making it out there, guys. In Cali, it's crazy. By the way, President Pump, is that his new name? President Pump. I'm sorry, President Trump. Or President Dump. Should we call him President Dump? Because that's what you're seeing here. He just appointed Pam Bondi as the White House AI board. Now she's battling cancer right now, so send a positive shot, a positive energy to Pam Bondi. She's battling cancer right now, so God bless her. But she's just been appointed to the AI board. What's your take on that? That's interesting.
Yeah, well, she's a full-fledged lawyer, so I mean, it's what you need, right?
And she couldn't even handle the actual Epstein situation, bro.
Yeah,
I don't know.
I got a feeling that wasn't her. That was her being told what to do.
Was she just getting out of the way? I don't want to get into that conversation, but because that's a hot topic. But I mean, it's funny she kind of moved from that into AI board. It's just Trump is just appointing. I don't think she's qualified for it, but honestly, I know she's a lawyer, but I think that's the problem with Congress. Too many lawyers, not enough real people that are in touch and actually connected with real world activity, real people, right? Too many freaking lawyers in Congress. I know they call them lawmakers, but I mean, come on, man. We need a balance. We need real people that can connect with I think John Cornyn, Texas representative, I think he's done. Long time representative there in Texas area. Cornyn, he's done. So some things are happening. Very interesting things are happening. So yeah, MasterCard gains approval to operate crypto and stablecoin payment infrastructures in New York. That's pretty big. Hand clap for that. That was pretty decent.
Well, New York is already restricted out there as well.
Yeah, New York. It's tough to get clearance in New York. So that was pretty heavy right there. Again, stablecoin activity is crazy.
Right. That's why Ripple did it same. They went into New York.
Right.
To get the RLUSD, and I think also with everything, what is it, Hidden Road they bought. So now it's Ripple Prime.
Yeah.
That all went through New York. So smart.
It's a smart, get ahead of it, just in case we do get some positivity. They'll be ahead of the fold. Let's get through it. 2000. ETH is basically moving backwards, guys. I think you're going to be at $1,900 by the end of the week, probably lower than that, 1,800. I think it's going to be where it's going to rest that big time movement when it comes to either 8 core research developers and core, should I say foundation members? Because a lot of those guys are leaving. Okay. And we were talking about this earlier. LMFG, I don't think this is an infrastructure issue. I think it's a roadmap issue. I think it's a development issue. The trajectory they're moving towards the wrong thing. People are wanting ETH to go more private, privacy, protocols. We need more of those. This is a trajectory they should be taking. They're behind the fold here when it comes to that. Now, the merger, I'm confused on the direction and why did they even do it, right? I've looked at all the pros and cons, but I have to tell you, the sentiment is negative. And when Vitalik is chopping, he's bringing out the broad sword and cutting out all this fat. What's your take on that? Because we're talking infrastructure issues here, right? I didn't see this coming. I thought we were headed towards Amsterdam. We were about to get these massive upgrades, privacy protocols, things of that nature. But apparently that roadmap is not what it should be. And a lot of people are unhappy to the point to where there's a shift when it comes to, ideology, when it comes to the roadmap, and when it comes to who is building out this particular, situation. It was going in the wrong direction, as we see. And when any company does this in the real world, we understand why. LMFG, big time movement here when it comes to the core with ETH. Are we going to see a downslide in this price? Is that going to induce a lot of fear? A lot of guys are staked, so they can't move, so they're losing. What's your take on this?
Yeah, me with my look on Ethereum, I don't see it's going to last in the long haul.
Yeah, it doesn't look good.
They have so much to change. They're way behind on hell, even Solana's blowing them out of the water on its capabilities with smart contracts, from my understanding. So I don't know. We'll see. I don't think any of these things, any of these layer ones need to be at 2, 3. People call them for $8,000 and $10,000. I had my buddies, I set his up because he's so into it. I said, okay, it's going to sell at $8,000. I told him, don't hold your breath.
Yeah, I don't see it getting to $8,000. We used to, I think a couple of years ago, I seen a lot. The consensus was around the top, like a ceiling approach when it comes to this price, around 10K. But this was a 4-year outlook. I think those are probably going to have to be readjusted, because I don't know if they're going to have to deconstruct anything, but the privacy thing is the focus for a lot of people, and they're behind the bar when it comes to that. I don't know. Vitalik I think he's probably going to come out tweeting again, but it's tough to know. I thought the roadmap was headed in the right direction, but apparently there's some big time shift when it comes to the researchers and core developers here. I think 8 are already gone. Mass exodus. We're talking brain power. We're talking developers here. We're talking infrastructure.
You're probably $300,000-$400,000 a year guys.
Absolutely. Yeah. And that could be an issue too. Trimming the actual outflow of revenue. Too much going out, not enough coming in. Companies do this. Hate to see Ethereum going through this because this could actually, I don't know. Volume is still crazy, but it's going the other direction. It's not going the right way. All right. So we're going to be talking about Tether implanting that stablecoin in Georgia here in a little bit. BNB is just cruising. LMFG, $652. BNB has no issues here. Cruising. Topped off at around $1,100, earlier, about 8 months ago, I think. It was last year in December. Corrected to 600 plus, and it's just been cruising. Right. So if you didn't buy it at $200, you missed out on a pretty decent run with BNB. And we were laughing at this, especially when CZ was ousted. We thought BNB was done. We thought Binance was done. You had Gary Gensler at the time. He was, pointing torpedoes at, the Binance infrastructure. They're doing pretty well. They made it out of this pretty well. And we got Binance US up and going too. They got, legal clarity. Listen, there's nothing wrong with Binance. I think they weathered the storm quite well. XRP, we're going to be talking about this liquidity crunch, liquidity squeeze here. Ripple's doing great. When it comes to Ripple's institutional and, actual forward agenda, They've did a massive upgrade with the ledger as well. Ripple has no issues here, but they're kind of leaving XRP behind LMFG. We're going to be talking about this liquidity issue with XRP very, very soon, because there may be some downward pressure that could probably push this price below $1 once again. There's a lot of headwinds here and macro metrics that we need to talk about here. So I want to get that out there because a lot of the XRP maxes, they're not really talking about what's going on with this coin. We're going to talk about it briefly. Currently sitting at $1.32. We're talking about USDC not being used very much when it comes to these state-sponsored stable coins. We'll get into that with the Georgia one. Solana, $83. This seems to be a sweet spot for Solana. We talked about the massive upgrade that's coming up, pretty much an overhaul of the actual system. That's going to put Solana on not only steroids, but lightning fast finalities that are going to dwarf all chains. And it's going to be institutional ready, especially when it comes to the tokenization movement coming up. Payments, it's going to be ready. It's going to be ready. And they're linked with Chainlink as well, just in case they need that those Oracle support as well. Solana is primed for a major breakout next year. So do keep that on your wish list. Watch list, I'm sorry. And I'm DCing properly because I want a piece of that second run big time. I think it's going to go well over $200 LMFG. Tron 36 cents. That will skip over Dogecoin. I'm not too sure. It's still number 9 OG meme at 10 cents. But we already know Elon is not going to use it like we thought he was going to use it. So it's to be determined. We'll see what's going on with Doge. It's still number 9. It's phenomenal. It's an enigma. Hyperliquid, almost $60. Hyperliquid is doing absolutely fantastic. All right, solidified situation. I'm not sure what happened to Aster, because that was going to be the actual opponent, the actual thorn in the side, presumably for the hype situation. It is not Aster. What happened to Aster LMFG? Because Hyperliquid is trying to get back up to $75, and I think it's robustly going towards that direction. Post Clarity Act, this thing is probably going to get up to 100. You're going to see a massive, influx in green when it comes to these alts. These particular platforms, these perp platforms right here, derivative giant right here that we're talking about, Hyperliquid, I don't think it has anything to worry about. It's the king, it's the cream of the crop. It's the king right now. Aster cannot compete with this. Was Aster fraud? Was that a scam, bro?
Yeah, I'm not sure, but I did read something about Hyperliquid. They're doing something to be a thorn in the side of the poly market.
Yeah, absolutely, yeah.
They just came out with a prediction market, or they're working on it. I'm not sure.
Well, they got we'll get into the CFTC because there's going to be some new requirements when it comes to these prediction markets because they're evolving so fast. But yeah, you're right. The major player, Hyperliquid, I'm telling you, it's going to explode. Right? You're looking at this price, $60. You're like, it's out of my range. I get it. It's out of a lot of people's, especially retail. It's out of the range. But if you're a high roller, there's a lot of people, and you can see within the last 7 days up almost 20%. People are smelling what hype is cooking, right? And they're regulatory friendly as well. So, but go ahead, brother. I stepped on you a little bit there. Go ahead.
No, that was it. That's all I wanted to say.
Okay.
I read something about them doing something with prediction markets. So rock and roll.
Yeah, they're trying to take over. Definitely trying to take over. Zcash, major comeback LMFG. You had a correction there, but this thing was headed back to $700 before the actual correction. I want to look at the chart here because I thought this was dead. You had a development team collapse, right? This thing almost got up to $700 again. And then you had the major correction here, profit taking here, because a lot of people bought that dip at, I think, at around $290 to $250, I believe. Look at what you had if you would have bought that dip. And again, these high rollers, wasn't a meme coin, right? It wasn't a dollar or anything. But again, this is that BNB effect. Like this thing was almost down to 250. All right. It was deemed dead because of the development team collapse. This is a privacy protocol. This is what people are wanting. Institutions are wanting things of this nature. It's very OG too as well. This thing corrected hard and it was supposed to. Obviously it was going to correct. It went back up to almost $700 again. Right. So we're back at 556. So, and again, back to the rest of the countdown here. I love Zcash. I don't use the wallet, but this is the future. This is what retail, this is what people in the real world, this is what they want. This is what institutions want, privacy, along with these extravagant, ecosystems and platforms when it comes to RWAs that are coming. what's coming with tokenization, not only commodities, but with retail, in real world, activity, real world trading, assets. People want privacy with that. If they're going to put their home inside and tokenize their home, they're going to want it to be embedded and surrounded and embraced by privacy protocol. And I totally get it. Wouldn't you say, LMFG? If I'm going to,
100%. And you've heard
I want
me
it to be
talk
safe,
about
right? This is what I'm saying.
Yeah. I want to do it with my house.
Mm-hmm.
I want to make this an NFT. As soon as Clarity Act goes through, and a couple of companies, I know there's Propy, there's a few of them out there, but nothing here in North Carolina right now. But I'm going to 100% look into that. But without privacy, never happened.
No, it's not. It's not. Absolutely. Chainlink $9. It's crazy that.
And then all the medical. There's so much data that's going to come onto the blockchain, and like I said, you're going to need many of these chains, and there's going to be so much data there. Without the privacy, there's no way. I mean, especially when you start getting into medical,
Yeah, absolutely. That's a whole nother video right there. But yeah, no, we're used to dealing with this. Us seasoned crypto and DeFi, doers, right? But the real world, they're used to protection. They're used to the FDIC factor. They're used to security and regulation. So they want to see that in the space too as well. And that's what these privacy protocols give them, and anonymity as well too. This is what you get. Cardano, a big time push there for midnight, and the new protocol, 24 cents. Hoskinson's pushing very hard on that. I saw an article on that. So Cardano is going to do very well. It's not the fastest, it's not the slowest, but I think it's very appetizing for institutions. I think it is.
Yeah, I do see.
And there's that privacy protocol too as well. It's midnight.
Right. And with midnight, and then you have I just seen Hoskinson just put out that he's gonna USDM on the Python network.
Mm-hmm.
And then
I love Python.
Yeah, but what was it, the 22nd? That thing crashed for 4 hours. What was that all about? I didn't
know that. I gotta research that.
On the 19th, 2 billion coins were let loose, and it really didn't hurt the price. And either did the crash. It was. I mean, I think I bought a bunch of it at like.
Was it third party related? Probably so.
No, the Oracle went down.
Oh shit, that's not good.
Yeah, and that's so. There was a lot of talk about it, like 1 point of failure. So we'll have to see what happens. What they come. I
gotta look into that. I wonder if it's
fixes. Yeah.
I wonder if it's volume related. Maybe it hit a threshold. I don't know. Yeah, I gotta look into that. That's not good when the Oracle goes down. We know Chainlink was battle tested and stress tested before it was absorbed, especially with the AWS news this year. So they did a lot of stress testing with Chainlink. That's why Chainlink is the cream of the crop when it comes to that with the Oracle language. But there's other ones. You have Band. You have a lot of other ones. I'm going to be doing a video on 3 that actually are pretty good competitors when it comes to a Chainlink. But I will say a lot of them are battle tested, like Chainlink. So Canton is a good situation too as well, 15 cents. And we'll round it up with Stellar. LMFG Stellar is rebounding from some pretty decent lows. OG situation.
BTCC just signed up with them.
Oh, see, there you go.
They're saying early to mid next year, DTCC will be on the Stellar network.
Look at that, Wick. Look at that. See, this is what happens when you have good news here.
Yep. The DTCC, though, they're going to everybody. They're not just going to Stellar. They're in with Ripple already. They're looking at Solana, I'm sure Ethereum, all over because, like I said, you're going to need all these chains. Or you're going to put trillions of dollars on one chain. You'd be out of your bird.
Yeah, it's not enough bandwidth. One chain does not have enough resources for all.
Right.
You're right.
And look at the chains that they're going on. All the stuff that's been running for 8-10 years.
Yeah.
None of these new ones. So the new ones, it's just a little time. But like I said, you're going to need so many chains. The interoperability is going to be so important.
No, you're right. You're going to need that. But this is interesting. It looks like a meme coin that just woke up. Crazy, up 12%. The 24-hour uppage here is crazy within the 24 hours. But you can see that's what good news does to coins that are asleep. This is good. This is good for Stellar. We'll round it up with Stellar. Hand clap for the altcoins. Nice rotation going into that situation. So I want to get into the actual news here. So we were talking about this earlier. CFTC declared that this is linked to the Clarity Act, right? So CFTC may gain broader crypto oversight as staff who questioned major firms were reportedly sidelined. So we have some. I don't like this LMFG because we're talking about these prediction markets, Polymarket, the top three, even Crypto.com. They have their prediction market as well. These major players are questioned by some CFTC members about what was going on, insider trading, right? The structural value, investor protection, a lot of the guardrails that were not in place, right? This is why Polymarket was kicked out of a lot of states, Classy, things of that nature recently. There's a pathway in, but the Clarity Act is going to expand the CFTC's broader outreach when it comes to crypto oversight. And internally, they're like, we can barely handle these prediction markets in this evolutionary pattern that they're displaying. We need more money. We need more people. So I believe, and I told you this before, I don't think the CFTC is equipped to do this when it comes to crypto oversight. The SEC was not. That's why they split it off. But the CFTC, I don't think it's going to work, LMFG. Now, we'll read a little bit into this. And I want to get your take on this because regulation, this is part of the Clarity Act. The oversight was split and it was actually expanded. The CFTC cannot handle this. Now, if they cannot handle prediction markets, how do you think they're going to handle the rest of the assets that they're assigned to LMFG? I think we're already starting on the wrong path here when it comes to regulation. And prediction markets are heavy, big time situation here. CFTC crypto oversight is moving towards a larger role under the Clarity Act, but the agency that Congress may soon ask to police much of the U.S. crypto market, which they cannot in the current state, guys, is facing more immediate test of its own when it comes to independence. Now, Congress is already saying we're going to actually you remember, you always say this, who's watching the watcher? This is exactly what's about to happen to the CFTC. Because Congress is like, we don't think you can handle it. And they've already displayed that they can. They've requested more money and more manpower already, right? So let's get into this and I'm gonna get your take. New York Times investigation reported that the Senior Commodities Futures Trading Commission officials who raised concerns about Polymarket, Crypto.com, and Gemini Link prediction market plans were suspended, investigated, and pushed out or cut out of the relevant discussions as agency leaders help those firms secure favorable regulatory outcomes. So these three entities were fast-tracked, right, into compliance. This was after a lot of red flags were raised by the actual committee that was picked to actually regulate them. They were pushed aside because they said no. So if we're not going to allow people who are assigned to regulate these markets do their job, due to Congress intervening here, fast tracking, saying, yeah, there's some issues here, but we need to get these going. Move aside, we're going to fast track this. It was one person that gave these three the green light. LMFG, if this is what we have going on, we are already starting on the wrong foot. What's your take so far?
Yeah, that would be pretty ugly, huh? I don't know. Typical politicians, right? Crazy.
I mean, who's watching the watcher? We got to get somebody to watch these because you have Congress coming in and saying, we'll just go ahead and move it through. They're good. No problem here. Because these markets are going to influence midterms. Let's go ahead and get it out of there. So I think this is why they wanted to get them going. Okay. Let's continue with this. It gets ugly, man. That report lands directly on top of Washington's crypto market structure fight and the market broader debate over CFTC's crypto oversight. The Clarity Act will shift a large portion of spot market crypto oversight towards CFTC, which they cannot handle. And when they do make judgments, they're actually overruled. Let's continue. Turning an agency already known for lean staffing, understaffed, underpaid, into a likely federal watchdog for exchanges, intermediaries, surveillance rules, conflict controls, and customer asset protection. LMFG is too much. They are not going to be able to do this because a lot of these particular situations, these they're on different separate rails. They're not going to be able to do this, bro. So Crypto Slate recently reported that the bill would put the CFTC's crypto capacity to test. They don't have a crypto capacity. They've never regulated entities of this nature, LMFG. I digress though. The Times reports added a harder test, whether the agencies has the internal independency, which we've already know they don't from what just happened with the prediction markets here. They were completely usurped. There was some intervention there. They were set aside because they were told they didn't know what they were doing. So there's no independency there. That test was failed already. Do they have the capacity to actually do this? This is a question. Now, LMFG, what's your take on this before we get into it? Because I'm gonna get into why the staff was actually sidelined. These are the three entities that they were told that, we heard you, right? But we're gonna make our own ruling. Polymarket, Crypto.com, and Gemini. These are the three jobs. Kalashi was not, and by the way, Kalashi is compliant. They were not in this fold. What's your take on the governance factor? Because one current commissioner is actually listed. One guy. What's your take, bro? We're starting wrong here.
Yeah, and I say all of this needs to get away from the government, from the Congress, and all of this to an extent. What I would love to see, a committee, two high up level guys, maybe one lawyer and a CEO or chief financial officer of each project. Whether it's Solana Labs, you got two guys from Cardano, two guys from Ethereum, two guys from Tether, two guys, and I don't give a shit if there's 20 of them there, right? But you take the tops and let them go, and so at least you have a liaison between them and your CFTC, and you don't need to add the 600 people to CFTC, maybe 100, but from projects and split across projects. You can't have 20 guys from one project. You follow me?
Yeah, no, absolutely.
That's just me dreaming, wishing, it would be nice, but I don't know. I see it being corrupted. It's going to get corrupted.
Yeah, it's already starting wrong.
Yep.
It's already starting bad. And this is just one of the reasons why, this is one of the, there's a lot, but, this is why I really don't like the Clarity Act in its current state. This is what they're not telling you guys. Now, the workload is crazy. For the one commissioner listed, and there's 5 seats, right, that need to be commissioned, that need to be filled. You only got one that's filled, right? Again, the workload is crazy. I need to go back there. The spot market crypto oversight, which is crazy. They can barely handle prediction markets. How are they going to handle the spot market? Registration rules, I don't think so. Surveillance, multiple rails we're talking about. They don't even have a tool for this. They don't even have infrastructure for surveillance. That's a massive fail right there. And this is what the Crypto Act in its current state is requesting that this committee do, right? Along with their other, responsibilities. It's too much. Conflict controls, right? Customer asset protection. We're talking about, investor protection here. They can't do it with not just 5 seats. They are asking for $410 million and over 650 FTEs. More bodies. And they want to be independent. They want more independence. LMFG. I don't think we're going to get the Clarity Act. What I see here going on with this split, along with the ethics law, along with what's going on with DeFi, because there's still some issues that need to be worked out there with DeFi. I think it's going to get shelved, especially if midterms doesn't go the right way and we have escalated values in the Middle East. I don't think we're going to see it. That's going to be very extremely bearish. And what I'm telling you that's going on with the CFTC and their struggles with prediction markets, I think it's going to get worse. I think when it comes to this factor along with others, it's just going to get worse, and it's not going to pass. LMFG, am I too bearish on this? Or I'm just being realistic with you. I'm not very bearish on the Clarity Act right now. It's much more than stablecoin laws, banking community versus crypto. It's way more than that. The headlines was Coinbase, stablecoin acceptance, stablecoin yield. Will the banks capitulate? That was the headlines. This is more deeper here. This is a big time issue. If it is passed, and if all of this is levied on the CFTC, there's going to be massive failure. Massive failure when it comes to not only surveillance, registration rules, spot market oversight, customer asset protection. Major red flags here because they just can't do it. And I don't think they're going to get the funding they want either as well. Just to close on this, what do you think they're going to get funding? Do you think this is flawed out of the actual flag? Are we headed for disaster when it comes to not only crypto, asset protection, investor protection, but when it comes to surveillance? Or are we already failing here? Because I don't think the CFTC is going to be able to do all this.
Right. And like I said, these Genius Act and the Clarity Act, even if it goes through, these things are going to be tweaked over the next 5 years so much. They're going to be a constant. It has to, and I really do think they need to have some kind of outside committee that can at least teach these guys, because they're not going to know, They have
no idea what they're doing. You're right.
They have absolutely no clue of how powerful blockchain and cryptography is. And I don't think they want to even bother learning. I mean, half of these guys are probably 3/4 of the way through their career,
Well, they were already derailed by Congress, by these, the watchers that were watching them. When they were trying to rule on these prediction markets, they were like, no, we can't let this go. These states we can't let that. They have to fix this and that and that. And this phantom watching group came in and said, you know what, we get where you're saying, but you know what you're talking about. We're going to go ahead and let these go through. We're going to give them pathways here. And then we'll talk about it later. That's not how you regulate, bro. You can't regulate like that, especially this market. This is Wild Wild West. This is crypto. You cannot use a passive approach when it comes to cryptocurrency, when it comes to DeFi, right? Especially when it comes to investor protection. This is why the FDIC will not get involved. They will not insure crypto holdings because of this method of regulation and passive method. This is not good. I don't like where this is going, right? So we'll move on. Let's go ahead and move on to something else. XRP is sitting on a volatility trap, LMFG, as liquidity drives up and leverage builds. Now, CryptoCoin data shows very, very scary data, by the way. Let's get into this. Shows XRP liquidity on Binance has fallen to the lowest level since 2020. 6-year low, brother. Not good. While futures open interest stays elevated. So there's that derivative pressure that we're not used to with alts. All the gambling, putting massive pressure on spot. It's creating a setup where the next large flow could trigger an outsized move in either direction. So it's kind of up in the air where this is going to go. We can go to $3 or we can go below $1. Either way, it's going to happen very quick because of that derivative leverage and those positions and that weight, right? So CryptoCoin's data shows XRP's 30-day liquidity index on Binance, which is the largest exchange, right? So this is a good gauge, very good barometer, very good metrics you can use here. That fell to the tune around 0.043. This is pretty significant, guys. It looks like a tiny increment, but it's very significant. It's lowest level since, so go ahead and say 6 years ago, right? While futures open interest, that derivative hedge, that weight on spot on the exchange, since this sits near almost $500 million, guys, right? That's a lot of pressure on spot. There's a lot of pressure on retail. There's a lot of pressure on people who bought at $3 recently. Okay. Liquidity is draining from the order books while leverage stays active. Derivative pressure. Bitcoin is going through the same thing, leaving the market compressed beneath a surface that reads as quiet. XRP's consolidation is happening in a thinner market, LMFG. No new money, just old money. You have ETF inflow, but that's institutional. I think that's a lot of institutional money that was already here that's kind of floating into the ETF ranks, which is being sold right now, but I digress from that. Back to XRP. Thinner markets where the next large flow, whether it be up or down, could move the price more aggressively than recent flatness suggests. Now, CoinGlass puts the all exchange XRP open interest near 2.9 billion. LMFG, that is a lot of derivative leverage pressure. Okay. With a 24-hour future volume around 2.1 billion against spot, which is only at $370 million. Okay. This is a ratio roughly at 6.8 to 1 LMFG. Those are not good, right? Which means derivatives are already shaping price mechanics independently of organic spot activity. What's your take so far on that?
Yeah, not too pretty, huh?
No, it's ugly.
Again, I want to just see what happens, what Ripple does with their holdings, when they go public. And I do believe they'll go public. And I think they'll do something with that 45 billion they hold. We'll see. I know my fingers, that's what I'm hoping for, fingers crossed.
Yeah, people are just going to hold. A lot of the maxis, they're going to hold through this, right? But this is a thin book, man, since 2020. We'll read a little bit more and we'll get into this beautiful stablecoin that they just launched in Georgia. State-sponsored stablecoin. Now, when the market depth is deep, big trades get absorbed. This is kind of like the outlook here with the limited movement. But when depth is thin, like the market is right now, the same order size pushes through the book faster, moves charts quicker, very dramatic volatility. This is what we're seeing, especially with Bitcoin as well. And I never thought I would see Bitcoin move like this, but when there's money involved of this nature, even Bitcoin is starting to look like a shitcoin. Now, this is turning ordinary flows into sharp candles. You see it all over the place in the top 25. And that cuts both ways, up and down. Now, CryptoCoin's Binance XRP 30-day liquidity reading is near 0.043, puts current conditions at their worst since January 2020, guys. A level that precedes one of XRP's most volatile phases. So look out below. This is what I'm going to tell you. Look out below. If you're holding XRP, there's some volatility that's coming your way. All right. I'm holding as well. But a lot of people are talking about Ripple's institutional movement. XRP is being left in the dust right now, unfortunately. Infrastructurally, it's nothing is wrong there. But when it comes to the price, be ready for major, massive volatility going forward when it comes to XRP. We may get back under $1. And it's going to happen very, very fast because of this thin line here when it comes to derivative pressure versus spot. We're talking billions of dollars up top with a spot at around just under $1 billion. Let's go ahead and say $3 billion when it comes to derivative pressure on top of a very, very lightweight spot market, guys. So that means this chart is going to move violently when the rubber meets the road. So, in conclusion, LMFG, or, is this scaring you? It's, for your seasoned holders, they're probably going to just buy the dip when it goes below $1. And that's what most seasoned investors, they're going to do because they believe in the product. Infrastructurally, Ripple is moving in the right direction as well. But are we seeing a bifurcated factor here to where Ripple may be moving to its own beat and leaving XRP behind? Are we seeing that?
Well, you still need XRP, even moving RLUSD, I believe. You still need it.
So there's still that pair.
But the fees are nominal. So the burning rate is so nominal. It takes, I don't know how many years, even if they're moving trillions of dollars, it's still going to be a long time before that burning happens, before it becomes something. There's going to be so much volume.
Yeah, absolutely.
And again, I think if they go public, they'll either lock them up, they'll put them in escrow or something, and they may even just burn them. I don't know. They have the cash, so.
Yeah, very true. Very true.
Ripple is fine. That's for sure. I mean, they go public. Yeah. They go public, that's one to look into, Yeah,
absolutely. Yeah. But they're still doing it. Can you still get it OTC? I don't know. I don't know. But I will tell you, oh my God, Ripple is doing some great things. I think the ledger just got a major up. They've been upgrading that ledger a lot. They just don't promote that. They don't talk about it a lot. But a lot of them actually know what's up. A lot of the deep XRPers that really pay attention to what's going on with the ledger, which is very important that the ledger is upgraded and updated profusely.
Right. And they did just sign a contract with to go not quantum resistant, quantum proof.
Yeah, absolutely. Yeah.
I believe they're saying hopefully within a year or so, sometime next year, that'll be a upgrade.
That's great. That's great.
So, a while ago, yeah. Neat. I forget the name of the company that they hired.
Yeah.
They probably wound up buying it.
Yeah, they got the money.
Buying companies. Yeah.
They have the money. Yeah, that's for sure.
They have our money.
Well, they have that. A lot of capital. Yeah, internal capital too. They don't need the VCs, and we know why. But currently sitting at $1.33 XRP, there can be some volatile movement here, guys. So just be understand. And I reason why I want to go through this, because I want you to understand, if you do see it go under $1, this is why. Right, a lot of derivative pressure, a lot of bearish nature. A lot of people are gonna run too when they see this move violently. Okay, doesn't mean XRP is going away. I'm just saying, don't be surprised if you get under $1 going into the third and fourth quarter, late third, early fourth. So just be looking out for that if you're holding. It's a good spot to buy again and boost your bag too in DCA even more, because it's not going anywhere. So I digress from that. Let's get into this DeFi news. I want to talk about DeFi right now. This is relevant to let's talk about AVA and AVA versus real world banking, because this is one of the biggest DeFi platforms out there. Okay, currently sitting at $85. And by the way, AVA, that price dipped a lot, but it should be dipping. It's following the market, right? But AVA is I think it's still a good buy at $85 because of the nature of AVA. But here's the headline: AVA is bank size, but 2.9 trillion in corporate loans. Reveals the risk DeFi still can't price. So LMFG, the actual situation that we have here is, can decentralized finance compete outside of the crypto space? We know it does a great job. TVL is still great. It does a great job, right? Can it compete with the banking systems outside of crypto? Because that's where it's headed. It's going to be bifurcated. Does it have the bandwidth? Does it have the collateral? Can it service real participants and people who are coming into this used to real world activity, used to brick and mortar, right? Used to the safeguards, the security, FDIC, protection, surveillance, regulatory values. Can it exist? Can it actually succeed? There's still some big issues here. Okay, let's get into this a little bit. U.S. commercial and industrial lending reached $2.89 billion. I would say that's too much. The banks are in trouble, but I digress. Almost $3 trillion worth of commercial lending, and there's a private sector too that BlackRock is heavily involved in as well. That's not actually reported. We don't get those metrics, only the public metrics. But let's just go with this $3 trillion. I think it's more if you combine the private sector with the public sector, probably around 20 trillion, but I digress from that. 3 trillion in the public sector. Let's get with this. A lot of it is commercial bank lending. And for the week ending May 13th, up to roughly 183 billion year to date. That's up 8%. All right, this year. Corporate America has borrowed heavily through rising rates and continued borrowing to tighten bank credit conditions, adding more bank balance sheets in the first 5 months of 2026. So it just keeps piling up. This is way more than what DeFi is actually, how should I say, able to handle. Okay. In its current state, and we're talking about AVA in this particular comparison, most DeFi protocols have basically intermediate in total have never dealt with this type of volume. Now, AVA ended 2025 with just 55 billion in deposits after peaking around 75 billion. That's not even a trillion. Okay. Placing it alongside mid-sized banking institutions in terms of asset scaling. Now, DeFi Llama data shows it current active loan books at around 10.9 billion. Okay, again, not even close to 1 trillion, roughly 0.38% of the US C&I loan market. So it's not even 1% in competition. Okay, LMFG. Tokenized credit across all chain platforms, including Maple, Centrifuge, which is a good buy, Stoker, and they reached around 5.3 billion in distributed value and 22.7 billion in represented value, according to RWI.XYZ. Together, those figures represent less than 1% of what U.S. banks extend to businesses alone. That we're just talking about the commercial sector. We're not even talking about retail. All right. So, can DeFi keep up? Check this chart out. 2.89 trillion LMFG. We're talking about the actual corporate credit market, right? In its whole commercial. We're not even talking about retail. 2.89, let's go ahead and say 2.9 trillion. AVA is in its peak in 2025, recorded 75 billion in active loans and things of this nature when it comes to U.S. commercial banking. Okay. And again, we're excluding retail. LMFG can, what I'm looking at, can DeFi actually exist in the real world in its current state? Do we need an overhaul in a lot of these protocols? Do we need more collateral? What are you seeing here? Because this is a huge gap. I don't think the banks have anything to worry about, especially on a commercial level. I don't understand why they're so, embattled and so, offended by decentralized finance moving into the arena. I'm looking at numbers right now and I'm like, it's nothing to worry about. DeFi can't compete currently, right?
Yeah, I say these guys are looking at a 5 and 10 year spreadsheet though.
Yeah.
Your budget, you're going out 5, and I would even think they may even go 15 years out.
So they're factoring in the evolution, that curve.
As it comes, it's going to be huge. But again, I keep saying it, they're going to have to change their business model.
Yeah, absolutely.
In period, banks are done. And granted, it's not going to be tomorrow. So it's 5-10 years down the road, but watch it. It'll go slow but sure. And that's why they're all, if you notice, they're all, I think even JP Morgan got their own chain running right now, right?
Yeah. Well, I think it's 4 years that they had it in the private testing. Yeah. So JP Morgan's ready. Yeah, right.
I don't know. And like I said, if I was a bank, I'm not even going to want it just on my own chain. I'm going to want to spread this stuff out across chains. I'm a big time disaster recovery guy. Every office that I dealt with, we had at least 3 local carriers, and some of them 4 and 5. I would bring even satellite or go line of sight over to there was WinStar, Verizon would do it in different offices, So I get permit to go up and put a satellite on the roof and jump right in on a Verizon network. Yeah. So the more networks, the better, and you spread it out. And then if you do have a loss, you're not losing everything. We'll see.
Yeah, it's interesting.
That's my vision,
Yeah.
Where we're going.
Well, the whole object of this, the target, the agenda is to, move this and compete, run parallel, and provide options and different, different targets for not only investors, but people who want to, compound, different options when it comes to retirement, because we have amazing yield opportunities in DeFi, but, currently it's not going to be able to, service when it comes to the type of volume that real world banking is getting. Only less than 1% they're going to be able to take on because of the lack of evolution. I may say the lack of updating, the lack of expanding. I can't really put it on the devs because a lot of these applications are automated, So I can't say that they did anything wrong because they had no clarity. A lot of devs were probably thinking that crypto was going to be in limbo for another 5-6 years. So, we didn't know what Trump was really going to be able to accomplish. We hit a wall with the Iran situation, but there's a possibility, a very slim possibility, that we may get the crypto, language, Clarity Act, which is, I see some major red flags with the CFTC regulating crypto assets in the crypto sector. We already see that, but hopefully they can get this done. But when it comes to DeFi, this is what is lacking, LMFG, because I think they have to fix these things. I was reading this earlier and I'm like, I got to share this because DeFi is not ready, and I hate to even say that out loud. It's not ready for prime time. And I thought it was. It is not ready to compete. Even Ava, which is the leading one, it can't compete with commercial banking. It can't compete. And we're not even talking about retail right now. But where the volume is, where they can generate so many fees for these platforms, they can't really compete in their current state. Here's a couple of bullet points before we get to the last story here. Cash flow underwriting requires evaluating whether a borrower can repay from sales margins and contracts over time. DeFi protocols price tokens collateral dramatically and accurately with no equivalent mechanism for assessing a company's revenue quality or convenient compliance. That's an issue there. Corporate borrowing is useful precisely because the borrower lacks liquid collateral equal to the loan amount. And DeFi, and let's talk about DeFi's most battle-tested lending markets like Ava rely on over-collateralization, LMFG, to reduce default risks by removing the need for trust. Real-world collateral requires verifications, custody, legal enforceabilities, and recovery processes that smart contracts alone cannot execute. Welcome to the show, Mom. I hope you're doing well. This is what smart contracts cannot do. I'm going to read this again because this is a big one. Real world collateral requires valuations, verifications, custody, legal enforceabilities, and recovery processes. This is something that smart contracts alone, these automated situations, they cannot execute this. Tokenized credit platforms like Maple and Centrifuge have made progress in this direction, but their combined distributed value of 5.31 billion represents a fraction of the receivables-backed lending that follows or flows through traditional bank facilities each quarter. So brick and mortar is light years ahead. And they're antiquated, but when it comes to the competition, when it comes to the parallel, actual, comparison here, DeFi has a lot of work to do, especially when it comes to recovery processes. They're not there. We know that for a fact. Smart contracts are not there. Okay. AVA can liquidate ETH or USDC collateral in a single block, while corporate credit workouts involve convenience, waivers, restructuring negotiations, servicers, bankruptcy proceedings, and court. So that's one of the good things that you have in DeFi. You can get all that done in a single block, very automated, very quickly. In the banking sectors, commercial sectors, real world sectors, it's a very antiquated process. We get that. Just to sum it up, Ava's Ethereum USDC borrowing APR, which is phenomenal compared to what you see in real world banking, sub 1%. On May was at 12% LMFG. Let's go and round it up because it was 12.82%. We're talking APR, 32%. You're not getting that in the real world LMFG. This is where DeFi shines. But infrastructurally, they have a lot to fix. This is compared to the 30-day average of 4.72 for the same pool, which tripled over the measurement window. So there's a huge gap when it comes to APR. We know this is why we love DeFi versus the real world. An average of 12.82%. I'm gonna pick that over real world APR all day long because this is where it wins. This is where DeFi wins. But infrastructurally, there's a lot of issues here with DeFi that has to be addressed. With valuation processes, verification processes, custody, legal enforceabilities, and recovery processes. They got to update that, bro. So in a nutshell, this is why I think we need to get this done, right? AVA, you need to get it done. LMFG, are we ready? From what I read, but do you still think that DeFi can compete and can perform? Or is it kind of a lackluster movement here? We need to open up the actual hood, and they need to update some things. They need to get compliant here before they can even begin to compete with real world banking. And by the way, they're sitting at 3 trillion when it comes to what AVA is sitting at right now on a yearly basis, 75 billion. And we're talking active loans. Right. And activity. We're not even talking about tokenized because that hadn't even passed yet. We don't see that predominantly, even with the RWA TVO soaring. It hasn't really expanded outside of the space. So what's your take on that?
Yeah, I say yes. And again, it has to be spread out. You know what I mean? It's not going to be just Aave. It's not going to just be Hyper. It's not just going to be Ripple. It's going to be a bunch of these chains that they're going to get spread out. And the biggest thing is going to be this interoperability. And this is why I can't wait till these layer 4s get rolling and see what's going to come from them. Like what Frame is doing and the L1X. And there's a few other ones out there. The more that, I don't know about these virtual machines. You got SVM, you got EVM, I don't know. I think there's still going to be a lot of changes and tweaking to the whole thing, the whole 9 yards. It's because it's so vast of what it can do. And then when they start doing something, they're like, oh, but then you can do this and this and this and that. And it just snowballs onto every project that has started. You think about it, Nobody knew about smart contracts back in 2014 and 2013 when they were building this. And then all of a sudden, oh, what's a smart contract? Yeah, let's do that. And then all of a sudden, we got all this data out there. That's not good. We need privacy. And so the last 4 years, every project's going nuts on privacy. And you just got some built out, like Gordon Hoskinson just builds midnight, you know. You got, like you said, Zcash. Was it Morpho, I think, is one, right?
Yeah, Centrifuge. There's a lot. There's a lot.
So it's going to take time, that's all. I thought 5 years ago, rock and roll, Genius Act, Clarity Act, this is going to go through. Hell, that was back even when Biden was in there. I'm going back 3-4 years ago. I really thought this thing was really going to go. And then now that even reading and learning more, and then I'm seeing like, whoa, this is... And I can see why the banks are screaming about it, but they're screaming about it because they don't want to lose the future.
Mm-hmm. Yeah.
And we'll see. And so far, like you said, Aave is not look at. You know what I mean? Pay attention to them.
Yeah.
We'll see.
It's not glamorous. Like a lot of people don't look at it as a glamorous situation, but this thing can quickly go absolutely bonkers. Post language.
I think as a whole, per year, it's somewhere around $4 quadrillion a year gets moved throughout the world. $quadrillion, dude, per year. My memory doesn't. Miss me up on that one. That is not chump change. That traffic is so huge. And you put that on blockchain, it becomes 1/3 of the cost than running it on where we're running today with the mainframes and everything.
The overhead drops dramatically.
Yeah. So, and your disaster recovery increases dramatically. Mm-hmm. Your disaster recovery costs dramatically reduced. I mean, on and on. And that's, I'm the layer one guy. You know what I mean? Mm-hmm. And I don't mean by layer one, I mean the cable that comes to your house, and then the layer 2 and 3, the routers, and how you get that stuff rolling. And you can back down on that bandwidth. Is huge. You know, I told you, just bandwidth alone, I think we were spending at least 12. I'd say $12 million to $15 million a year. Yeah. And that's small Robert Plant company. You know what I mean? And it was a $40 million budget. I got it down to like $25 million budget. Mm-hmm. I mean, you go look at an AIG or any large company. Think about what BlackRock pays just for their network infrastructure. It's got the billions and billions of dollars a year, and you're going to take that and chop 60% off of that overhead.
Yeah, I think at the most, 3/4. 75%.
That's huge.
Yeah, it's huge for inflow too when it comes to profit. AI and blockchain, it's going to change a lot, especially when it comes to overhead. A lot of people are going to lose their jobs. I don't think AI is ready to take everybody's job, but I got to tell you, these automated trucks that we're starting to see on the road. That's crazy. I seen it. That type of stuff right there is where we're headed, to where they're about to take drivers out of trucks. Trucks are autonomous. I saw one, guys. I saw one of these trucks in action, and it gave me chills to see that vehicle loaded and driving down the road, making turns, and doing pretty damn good in traffic too as well. I followed it for a good 15 miles. This is where we're headed. These things are out there right now. Okay. So when you factor that in, of course, a lot of companies are getting ready for this. I think they got the carriage before the horse, because a lot of the companies that fired a lot of people because of this AI movement, they're trying to bring these people back because AI is not ready for that. But as far as these autonomous trucks, it's about to upset the whole industry. So you can move this into not only when we're talking about trucks, but infrastructure, with the business factors, with what we were talking about with BlackRock, downsizing, building. A lot of these builders are going to be using AI to do blueprints and things of that nature. They're going to have to contract out anymore. They can just put a prompt in and tell AI what type of house they want to put on their land or their development, and it'll build it out. Blueprints. complete. I mean, it's crazy where we're headed, LMFG. And again, that's going to reduce a lot of overhead for a lot of companies. It's a major adjustment that we're going to get to. But when it comes to DeFi, when it comes to AVA, I think they have some work to do in order to compete on a commercial level, because I think that's the volume that they want. You know, that retail volume is good, but commercial volume is what these platforms need to go to the next level. But they got to be able to handle it. So this is what I'm talking about. All-time high for this is $666 LMFG. This is 5 years ago. This thing was just under $1,000, so it has the potential to get there. Post language, right? It's $85. It's still not very glamorous for a lot of investors, but the high rollers are, I guarantee you, they're buying these dips, because we're talking about ATAs that was just below $1,000. The potential is here. You just have to know where to look, and you have to know where to DCA, guys, because there's going to be a lot of blood in this market if war breaks out again in Iran and a lot of the infrastructure gets damaged once again. There's going to be a lot of blood across the board. Know what to get into, because that's going to be your chance to get the leg up on a lot of infrastructure, a lot of RWA infrastructure, you know, a lot of DeFi infrastructure, a lot of tokens like AVA that are going to drop dramatically. You'll be able to get on board, because the ride upward, it's going to make a lot of millionaires, new millionaires going into the next 5 years. So not financial advice, but you need to do your research on these type of situations, because it's not all about memes anymore. Everything is about to be legitimized. A lot of this product, a lot of the infrastructure, a lot of this blockchain technology, a lot of the DeFi is going to be implanted and moving into the real world. And that volume is tremendous. That's what's going to move the market cap globally up past 2.5. This is where it is. We're talking about 7-10 trillion globally in the next 5 years, maybe even 15 trillion globally. That's going to be crazy numbers when it comes to altcoin activity, Bitcoin, Ethereum, new ATHs. So the time to get in is when there's blood. LMFG, what you take?
Yeah, I don't know, man.
Yeah, you're cautious. You think we're still going to go down even further, huh?
Yeah, I you don't know. You don't never know with these guys. With a
lot of manipulation. Yeah, very true.
And you got all these ETFs getting dumped, and like I said, I don't trust sailors now for nothing. He's buying bonds. So imagine he takes half of that Bitcoin and just puts it in bonds.
Yeah, I was talking to a guy about that. It was like, sailor, he's not going to hurt Bitcoin. He can sell it all, and he wouldn't hurt Bitcoin. I don't know, guys. A lot of people think that. There's a lot of people that think that, bro. That if he just went all out and strategies just went belly up, Bitcoin would be okay. I don't agree with that assessment.
There'll be an awful lot of followers.
Yep. Oh yeah, the fear is real. Let's go ahead and get into this last story here before we get out of here with the actual giveaway. This is cool right here, but a lot of people are like, this is a wolf in sheep's clothing. This is what these are. Tether's Georgia stablecoin plan moves early on national payment rails. Now, GEL Tether puts the actual lure on private stablecoin rails, but issuers' approval and reserve and redemption rights and payment accesses will decide whether it works in the long run. So let's get into this. Tether and the government of Georgia plan to launch a stablecoin. It's going to be GELT, pushing a national currency, LMFG, directly onto private stablecoin rails before most governments have even settled on how the model should work. So they got the carriage before the horse. We see this a lot. The Tether Georgia stablecoin plans centers over GELT, a stablecoin representing the Georgian lira. The May 22 announcement, this is very recent too. This thing is online. Describes GELT which is a Tether product, as the official stablecoin of Georgia and ties the project to the country's digital asset framework. It says the token is intended to lower transaction costs, settle near instantly, support programmable, there's that word, programmable payments, and improve cross-border commerce, fintech development, and digital payments, etc. That makes the Tether Georgia stablecoin plan larger than a single new token, guys. Georgia is trying to turn Lira-denominated value into a payment infrastructure, guys, while representing its rule book and compatibility or compatible, making sure it's compatible, with the emerging U.S. stablecoin framework. created under the Genius Act. You forgot about that, right? Tether gives the plan scale and distribution credibility, but the announcement leaves a practical architecture unresolved. Again, carriage before the horse. Who issues GOT? Where are the reserve sets? These are the remaining issues here. Who can redeem it? Which network supports it? And how far official oversight actually reaches? So again, carriage before the horse, LMFG. This is what we're doing. I think the Wyoming infrastructure, Wyoming is a little bit better, but Georgia's just throwing this out. I wonder what they know. I wish I was a fly on the wall. I wish I was a fly on the wall during those discussions. Now, the plan puts a national currency on private stablecoin rails, but the launch still depends on concrete implementation details. All right. National currency, regulatory framework, which is, hopefully we'll get that, right? Who controls it, details, all this is pending. Reserves, custodian redemption pathways, network rollouts, who's going to support it. All that is in the works, but LMFG, there's a national security, a national currency factor to this as well. What do you think about this, brother? We got this. We got the one that was in Wyoming, but I don't think that went as far as this one. This is a go as far as Georgia's concerned, but there's a lot of underlying issues that they have to figure out here, but it is a go. This is going to be part of payments, cross-border activity as well, remittance. What you take? Are you bullish on this going forward for other states? I know Texas is moving on with their plan as well. I don't know if they're going to be backing these, with gold, because I know Texas wants to back it with gold. What you take, bro?
Yeah, I'm not sure. And how are they going to use it? Are they just going to pay the state bills with that? Are they going to accept that for state bills, whether it be taxes or registering your car, whatever you got to do with the state? So I'd like to see, I'd like to see what that, what that looks like on paper. Like, why are they doing this?
Yeah.
Where are you going with it? And like they say, they want to put AML in there, and then I think people need to be shields up. Like, don't get paid and receive it in GLT.
I don't want.
The company says, "Oh, we can pay you in the state stable coin."
You don't need the dollar. Yeah, let's get this right.
Now, state employees, right? Are they going to put the pay? Now they get rid of ADT, right? That overhead is millions of dollars a year, right? With their payroll, how to get the paychecks out to all the employees. Now they use the stable coin, and this is something. AML. They can stop it at any given time.
It's programmable. Absolutely. It's a CBDC, bro.
I know. I think it's smart for the states, and as long as they use it right. Pay their bills. That's it. You know what I mean? And if you want to go ahead and trade some Bitcoin for that Georgia stable coin and then pay your Georgia state taxes with it, fine. But don't accept your paycheck in it.
Yeah, you don't need that old tax.
You take your paycheck in Bitcoin.
Yeah,
in a state stable coin.
Well, they're trying to get national acceptance for it too. So if they do get that, I mean, this is what the Genius Act was all about. And you couple that with the Clarity Act, and then there you go. Every state is going to have this. Every state is going to. I think we're moving away from the dollar. I really do. This is the pathway. This is a pathway of moving out of the dollar and basically extinguishing the debt. This is what the Genius Act was about. This is why they labeled it the Genius Act. They're extinguishing debt, which is unpayable. We can't pay that, guys. What, 40 trillion pushing almost? This is how you get rid of it, right? So this is how you put the blanket over it. And a lot of the other countries' leaders are like, man, are you crazy? This is why Japan is starting to sell treasury bonds. They see what's coming. But, I just want to end with this. I think it's cool because, I think this is where we're going now. The programmable aspect of it. Again, wolf in sheep's clothing. These are CBDCs. I don't care what they tell you. These are CBDCs, wolf in sheep's clothing. Anytime you bring up the word programmable payments, programmable support, layers, they're going to be able to stop this from being used. Let's say if your social credit score drops at a certain level, they're going to be able to tell you what you're going to do with these and what you can and what you cannot do, how much you can spend and how much you can't. This is the retort. This is the actual negative part of this. I think they're going to do the right thing, but there is a negative side of this. because they're using the word stablecoin. But again, wolf in sheep's clothing. This is what that is. This is essentially. So, and it's crazy that this is started in the South. You know, you have the Wyoming push as well. But I think the Wyoming thing is just government settlements and, you know, payments. It's not a retail coin. You know, retail's not, you know, lower level individuals are not going to be using that. Business, commercial coin, right? I don't know if that is the agenda here in Georgia. You know, I don't know if you're going to be able to receive this, you know, have an option to receive the GELT, you know, versus dollars. You know, you would only be able to spend it in Georgia, though, you know, in its current state, if it was released that way. You couldn't take this across state lines into Tennessee, into, you know, the Carolinas and spend this coin. It's not going to happen, you know, so we'll see how far this goes, but it's very interesting. So with that being said, I don't see anything that's really popping, you know, when it comes to actual crypto related news. We already know what's going on with the consolidation effort of the market. We're just waiting on geopolitical de-escalation, LMFG. This is what I'm waiting on. Let me see what's going on here before we get to the giveaway. Yeah, you know, this is it, pretty much it. Everybody's talking about the Ferrari electric car. Apparently Ferrari stock just dipped. You like the new electric car Ferrari just came out with? Did you see that? This is what Ferrari's doing. They're making electric vehicles now. $600,000 electric car. Did you catch that as we move to the actual?
Yes, it looks like a failure, if you ask me. That ain't making it.
Yeah, it's a bad idea. Bad idea. It is what it is, right? I mean, this is where we're headed. You know, electric vehicles. You know, I like the BYDs. I like what China's. That product is amazing. You know, I like some Tesla. I like the high end, the Teslas. You know.
Did you see what Geely just did?
No. What happened?
48% power factor out of the engine, the thermal factor.
Oh wow.
Yeah. You're talking like Formula One action. I believe they're right now saying 106 miles a gallon.
What?
Chinese company. Yes, sir. This kid came out and started all this shit. He started a motorcycle company, dumped that, and then he said he's going to build this car. Everybody laughed at him. He got this thing going. It was a piece of shit. And I mentioned something, and Sir Shields said that he had one years ago, and he said it was the worst car he ever had in his life. But this guy turns around, right, and he winds up buying Volvo from Ford back in 2020 or 2021, and then increased all their engineering on their crash test. Then he bought Polaris, and he bought another company. He bought a couple other ones. And so now he's got this car out there, and it was just put out where it exceeds the crash test ratings for side impact and all that because of the Volvo. And he's coming up with these patents, and he's doing like Mercedes did. He's letting them loose. So even though it's patented, but you could use it, no problem. Something to pay attention to.
So 100 miles per gallon, that's crazy.
Yeah. Oh, GM, everybody, Stellantis, they are going to not want this car to come to America because
they're going to lobby.
Line up to buy.
Yeah, they're going to lobby against it.
And from my understanding, it's quite a sharp car.
Well, they have really good vehicles. BYD has very, very nice electric vehicles. The range is crazy. They charge in like 15 minutes or something. You know, way quicker than the Teslas.
10-gallon tank. You're talking 1,000 miles.
Yeah. So what are we running? That's a gas vehicle you're talking about?
Yeah, gas electric.
A hybrid. Okay.
It's like a hybrid. I'm not positive. I have to read more. I have a feeling it's a generator.
What's the power outage? What are we talking? Output, I'm sorry. Because, you know, we're horsepower guys. We're old school.
I got to do more reading. on it. I just started that the other day, and I walked away from it. But
yeah, man, you got to send me some research and links to that. I want to check that out. No, but this is where we're going, man. We're going to see more electric vehicles put into play as we go into the future. So, you know, I just hope we get a better choice. You know, I'm not, you know, hating on Elon, but I would love to see more BYD vehicles. And I know Canada, they're so lucky. They got them. They got a better choice than we do when it comes to electric EVs. And the BYDs just look amazing. I love the way they actually look like regular vehicles. You know, it's you know, somehow like the Ferrari one, it's ridiculous. And they want $500 million for the Ferrari electric car. Who would, and it does, I think the Apple, they brought in the Apple tech to design it. They got to design the Apple phone or whatever. This is what I was reading, you know. What are we doing, Ferrari? You're known for just raw power. Why are we making an electric car? I don't think Ferrari needs that. Then maybe they do. I know Porsche's having money issues as well, but they've already did a electric car. They have a Spider that's a hybrid, massive horsepower coming out of that thing. I think Chevrolet has the Corvette, the electric Corvette. What do they call it? The E-Ray. I mean, why are they doing this? I don't know, but I digress. That's a whole other niche. Let's get into this giveaway. We have it populated. We're going to be giving out some Soul, guys. So we're going to get 3 winners. Let's go ahead and get to it. Let's see who we have. I think it's going to be Cespesonia. I think that's how you pronounce that. Absolutely. I'll call that one. So congratulations. Sonia, all I need is that Soul wallet and we'll get you your prize. Congratulations. And all you have to do to, get on this wheel and qualify for the weekly giveaway of Soul is to become a member, number one, interact with the member content, and then just comment on what you think about the content, and that's your ticket to get on this wheel. So Sonia, I'm probably screwing that up, but you are the first winner. Let's get 2 more. Most definitely is going to be beat. That was a really slow roll. That was interesting. I was going to call Ruvashai, but it kind of rolled over into B-Biz. I think it is BEBZ 121. So you are the second winner. We need 1 more. Let's go. I think it's going to be Sammy. I think so. Crypto Joy is coming up though. Let's see. This wheel is really greased up today. It's rolling pretty good. All right, Sammy 00171. That is it's going to wrap up the spin for today. It's going to be 3 winners. Let's go and get a recap on that. So we have Cespesonia. I think that's his hand clap. First winner. B-Biz. Let's go ahead. B-E-B-Z, B-Biz. 121. You are the second winner. I'm sorry. And then we'll round it up with Sammy 00171. Hand clap to you, Sammy. All I need is wallets. Send me the address, and we'll get your prize to you ASAP. So LMFG, your lasting takes, bro, on Bitcoin, the market, where we're going. Kind of in the middle when you look at the RSI. So people are kind of holding tight. Just looking for good news, man. What's your take?
Yeah, that RSI been sitting there like that for quite a while.
Yeah. It's holding tight, right? People are they're just holding on, man.
And anything can happen here. I mean, you watch. As soon as they say this, the war's over, boom, it's going to be a big implosion into this. I don't see them dropping the rate.
Me either. Yeah.
I really think it's June. He comes in, right?
I think so. Yeah.
Skip this month and then June, and I think he's going to sit still and hold. And I bet there's some dissent there. I bet you're going to have a few guys saying raise the rate.
Yeah.
We'll see how that. What they got.
I don't think they're going to raise. I don't think they're going to lower it. That's for sure. Go ahead.
Yeah. No, I think he's just going to have to sit. And even though he's going to have some dissent, guys saying raise the rate, and we'll see what happens. And as long as this war goes out, whether that Clarity Act gets, I don't see it happening. And with it not happening, I just see this thing just sitting flat all summer until these guys come back.
So what's your floor on BTC if we do go flat?
Yeah, I'm saying 70. If the war gets ugly, guys, I'm serious. You 60 or below.
Yeah.
If this thing gets ugly, I'm serious.
I agree.
You'll see gas go up to. They'll be paying $12 a gallon in California. We'll be paying $6 here in North Carolina.
We got a lot of commuters in California, bro.
Yeah.
Gee, man, that's a lot, bro. I mean,
deal with it today. I got a friend that lives out there. He's 7.25. He's paying.
Yeah.
You know, and then you go to California, how many of those are all BMWs and Mercedes? They all run on high test, guys. They charge an extra $1 a gallon. So if you're paying $7, they're saying $7. It's $8 a gallon for the high test. Crazy.
Yeah, you know, if we get up there at 10, 12, 15, see, the East Coast is not, you know, set up for that. You know, West Coast, they're used to those high prices, right? But East Coast, if it gets up to like $5, you know, $6 a gallon, that's a problem. You know what I'm talking about. That's a problem for the East Coast.
Roads would be empty like back in the 70s.
Yeah, we're talking bikes and skateboards.
They're going to say, okay, you can only fill up with the odd license plate.
Pogo sticks, anybody, you know? You know, the rideshare thing is going to collapse too. Uber's going to collapse. You know, your job is going to have to, you know, your managers are going to have to be picking you up on a tricycle. I don't know. It's going to get crazy. So hopefully, you know, everything goes well. Looks like President Trump, he's busy with the alien thing, you know, which I love the alien thing. But they're disclosing he's very much into that. He's got a lot on his plate. So with that being said, you know, be careful. There's a lot of scamming going on. Watch your wallet as well. And we'll catch you in the next video. Take it easy.